Very good morning, everyone. How are you all? I hope everyone is doing absolutely fine. I am also doing great. I welcome you all in my new batch for corporate finance reporting, that is paper number 18 of CMA syllabus. And I'm happy to inform you that for the first time we are recording corporate financial reporting, the entire syllabus focusing on CMA student as per ICMAI syllabus. When I say first time, it means in our previous recording, what we used to do, we used to take some chapter from CA final syllabus, which were common in CA final and CMA final, and some chapter which are only in CMA final syllabus that we used to record separately, combine both recording, and we used to provide that entire recording to CMA student. Correct? I don't want to say that that was not applicable for CMA exam. That was also applicable for CMA exam. But can I say in that particular recording, we are not focusing as per ICMAI syllabus. We are not focusing on CMA student as per their requirement. Therefore, from now onward, what we have decided is whenever we are recording CFR syllabus, it will be completely based on ICMAI syllabus, institute syllabus, focusing on CMS student. I think you are happy for that? Yes, sir. Now coming to the main features of the batch, already I have said this will be totally a new recording as per institute syllabus, as per ICMAI syllabus, focusing on CMS student. The batch is a regular batch. When I say regular batch, it means detailed batch. Everything will be covered as per the syllabus, as per the ICMAI study material. Nothing will be deleted. All the concept will be taken into consideration. All the question will be taken into consideration. This time, because this is as per ICMAI syllabus, we'll also cover the questions which are in ICMAI study material. Got this point? But can I say from a student point of view, we should not deviate from examination point of view also. So this will be concept oriented as well as exam oriented batch. When I say exam oriented, it means we need to also focus from examination point of view. Why? Because the main objective is to score in exam. We are here to score in exam, so that should be also taken into consideration. What I think that when you know the concept of any topic, when you have understood the chapter conceptually, you can handle any questions. So we'll give you the entire concept and we'll take all the questions as per the ICMAI syllabus so that you are ready for exam. You can easily score good marks in what CFR paper. Got this point? This time also what we have decided that we'll also conduct live Zoom session whenever required. Means in a interval, so that any student who are joining for this particular batch, their doubts, their problem can be also taken into consideration on live basis, so that I can understand them, they can understand me, and the doubts can be handled on a requirement basis. Okay, sir. So this time that also we have decided, so that will be also taken into consideration. Now coming to the next point about the applicability of the batch. So this batch, as it is a new recording, it will be applicable for all coming examinations. When I say all coming examination, it means because there is no amendment in CFR syllabus till the syllabus change. Yes, there can be amendment by way of new question. There can be some new question in the revised study material, or there may be some new question in upcoming model test paper or upcoming exam. So for that purpose, of course, an amendment video will be given to you. Correct now. And in that amendment video, we record all the new questions. Okay, sir. So don't worry about amendment question. Don't worry about new question. About the duration of this batch, because for the first time we are recording a batch exclusively for CMA student. We don't know the exact number of hours, but as per our experience, it can be 180 plus hours, or it can be some hour less than 180 hours. That can be understood only on completion of entire recording. Correct? The medium of the batch will be completely English, means all the discussion, all the explanation will be given only in one language, that is English language. Coming to the books, I will provide you two set of books. One will be Ind AS Saransh book. Ind AS Saransh book will contain all the content of Ind AS. Means our syllabus are divided in two parts. One is Ind AS, one is non-Ind AS chapter. For non-Ind AS chapter, I'll give you the concept in handwritten notes. Means I will write down everything in the class. But for the Ind AS syllabus, I'll provide you Ind AS Saransh book, which will contain all the content in a summary way, which will help you for the revision purpose. So one set of Ind AS Saransh book will be given. One volume of Ind AS Saransh book will be given. Second, I will also provide you two volumes of question bank covering all the questions of ICMA study material, correct? MTP, past examination question, and some question I have taken from ICMA syllabus also, because it has been seen in the past examination. In CFR, question are also asked from CA syllabus. So some question for better understanding, for developing your concept, I have taken from CA syllabus, CA final syllabus. Okay, sir? Yes, sir. So this is the about books. Now, of course, you know that in question paper we also have multiple choice question, and that will come in case scenario. So I will provide you a soft copy of multiple choice question booklet. So why soft copy? Why not hard copy? There are two reasons for that. First, multiple choice question will come in case scenario, and each case scenario will have some number of questions from different chapter. It means multiple choice question can be revised only after completion of entire syllabus. Got this point? Correct? Are you able to understand? Just try to understand. Chapter wise multiple choice question is already incorporated in question bank. Right now I'm discussing about case scenario multiple choice question, and that can be revised, that can be solved only on completion of entire syllabus. Second reason why I provide soft copy of MCQ booklet is that, I mean, right now you are taking the class, but your examination may be after 1 year or 1.5 years. By the time, can I say, institute will provide new multiple choice question in their upcoming MTP, in their upcoming books, in their upcoming exam. So that will be also need to be updated in MCQ books. So when you want to revise, just download the updated MCQ booklet. That will be only helpful from examination point of view. And that is the reason I don't provide a soft copy. I don't provide a hard copy of MCQ booklet. I provide soft copy of what MCQ booklet that can be printed. You can print it out. Correct now? Understood? So I'll provide you two hard copy. I'll provide you the hard book of Ind AS Saransh book and question bank. But I will provide you soft copy of what? Multiple choice question booklet. Got this point? Yes, sir. Now coming to doubts. Already I have said that I will take Zoom live doubt session on a I will say on some interval that I will decide. But to handle doubt, I will provide you the dedicated WhatsApp group or dedicated Telegram group. The link will be given to you. Don't worry about that. In that group, you can ask n number of doubt that will be handled as soon as whenever I am free. Sometimes it is quite possible you want to connect me in the call. Don't worry about that. In that group, just write down one message that, sir, I want to connect. You want to connect me with in the call. I will give you the time. In that time, you can connect with me in the call also. Okay, sir. Okay, sir. So doubts will be handled. Don't worry about that. I will say I will teach you in such a way doubt will only not come. Yes, sir. About test. So what I have done, entire syllabus I have divided into 5 parts. For each part, on completion of each part, I will conduct one test. The test paper will be given to you. Once that portion is completed and portion is revised, you can write down the test as per your time convenience. Then you can cross verify the answer with the suggested solution provided by us. Whatever mistake you have committed, that you can identify and you can work on that. So entire syllabus divided in 5 parts. So I will conduct 5 chapter wise tests and 1 grand mock test on completion of entire syllabus. Okay, sir? Yes, sir. Now, what will be your target? Because whenever we start any new journey, we should fix the target. And target should be known to us. When we know the target, then only we work on that. When we don't know the target, we will not work on that. Now target will decide how much effort is required to put in. If your target is what, high level, so high means I will say some more effort is required. If your target is low level, so you will not put that much effort now. So your target will decide. So right now you need to understand what should be the target. From my point of view, it is very easy to score 90 plus in CFR. We will fix that target only. So from my point of view, your target should be 90 plus, and that is practically possible in CFR paper. Why? One of the reasons is that whatever question will come in exam, that will be from question bank only. Only you need to revise that. If you have understood all the question, revise that on a continuous basis, you can easily score 90 plus. So why not target 50 plus? Just try to understand, if your target is 50 plus, that much effort you will put in. When you say my target is 90 plus, that much effort you will put in. I will say always fix the target at highest level so that you will work for that target. Correct? So you need to fix one target, and I will give you a target that is 90 plus in CFR from the day, from now onwards. You need to think about 90 plus in CFR. Write down somewhere that you want to achieve 90 plus in FR, then only you can work on that. You'll think about 90 plus, you'll work for that. If you'll not think about 90 plus, you'll not work for that. Okay, sir. Now 90 plus can be achieved if you are consistent in your study, if you are dedicated for that 90 plus, and if you are revising the entire syllabus, correct, properly. Got this point? You need to be consistent in your classes. You need to revise whatever we have done properly, and you should be dedicated for this 90 plus goal. Okay, sir. Now the last point before we start the batch, before we start the syllabus, that write down this contact number 8766246684. This contact number is for technical related doubt, any books related doubt, or any other support which you require. You need to contact in this number. Correct? Now the website is given for the registration purpose, but if you are already registered, write down this contact number. So whenever you have technical, books, or any other support related query, you need to contact this number only. I hope all the details you have understood. Now we are ready for discussing about the syllabus of CFR. What is there in the syllabus of corporate financial reporting? We can start that discussion now. Now let us understand what we have in our syllabus, that is syllabus of paper 18 corporate financial reporting. What I have done, I have divided the entire syllabus in two parts. First, the chapters which are related to Indian accounting standard, Ind AS. Second, the chapters which are not related to Ind AS. So what is this Ind AS? Ind AS full form is Indian accounting standard. Actually, what we have in India right now, in India we have two set of accounting standards. One is applicable to small companies, one is applicable to big companies. Now what are included in big company, that we will discuss in the later part of our lectures, not right now. Any accounting standard which are applicable to big company means listed company, there are some unlisted company also, that are now known as Indian accounting standard. In short form we call it Ind AS. That is a part of our syllabus. Means any accounting standard which is applicable to small company, we call it normally accounting standard. That is not a part of our syllabus. Got this point? Detailed discussion we'll do in the later part of our lectures. Okay, sir? Yes, sir. The good point is that we do not have all Ind accounting standard in our syllabus. We have some limited Ind AS. As mentioned here, these are the part of our syllabus. Among these Ind AS, there are some chapters from which actually big questions are asked. There are some important Indian accounting standards from our syllabus point of view. These are share-based payment Ind AS 102, business combination Ind AS 103, financial instrument Ind AS 32 and Ind AS 109, and consolidated financial statement Ind AS 110, Ind AS 28, and Ind AS 111. This will take maximum time to cover the syllabus. Means these are the big chapters. I will say these are the big chapters which will take more hours to complete this chapter, and these are small chapters which will not take much time to complete it. Correct? Got this point? We will discuss about this particular Ind AS when the chapter will start. Coming to the chapters which are not related to Ind AS, we have first internal reconstruction. Then we have valuation. Valuation, we have three types of valuation: valuation of goodwill, valuation of shares, and valuation of business. Then NBFC, non-banking financial company. Then development in financial reporting. There are some other development in financial reporting that we are going to discuss in this chapter. Then government accounting, it is totally a theoretical chapter. Totally theory. Haliki development in financial reporting is also some portion of theoretical in that. Okay. This is the entire syllabus. We are going to start our batch from valuation. This will be our first chapter. Then I will do internal reconstruction. Then I will do NBFC. Then I will come to what Ind AS. Then once the entire Ind AS will be completed, we'll come to these two chapters at the end. This will be the flow of our chapters. Okay, sir? Yes, sir. Before I start any chapter, let me discuss the question paper pattern. The question paper is divided into two parts, section A and section B. Section A will consist of multiple choice question. There will be 15 multiple choice question of 2 marks, means MCQ will be of 30 marks. This will be compulsory. This is mandatory to attempt. Then in section B, there will be descriptive question. There will be 7 questions, and out of 7 questions, you have to attempt only 5 questions. So you need to attempt 5 questions out of 7 questions, and each question will be of 14 marks. Each question will be of 14 marks. Okay, correct. Normally, it has been seen that some question might have 2 parts also. For example, if I will say question number 1 might have A, B, or it might have A, B, C also. It does not mean it will have only, you need to attempt only 5 questions. There may be more than 5 questions in each particular part. Understood? Yes, sir. You need to attempt 5 questions out of 7 questions, means you have an option to leave 2 questions. Means in descriptive part, in section 3, there is no mandatory. There is no mandatory, there is no compulsory question. Got this point? Yes, sir. Now we can start with a chapter. We will start with a chapter known as valuation. Valuation. Correct. Normally the weightage of this chapter will be from 10 to 12 marks. A question will come from 10 to 12 marks. Means you can say not 10 to 12. You can say 8 to 10 marks. 8 to 10 marks weightage will be there. Okay, sir? Yes, sir. Now valuation, this chapter has been divided into 3 parts. One is valuation of goodwill. Valuation of goodwill. Then valuation of shares. And then valuation of business. Valuation of business. These all are related to each other. Means if you want to value business, you need to know what is the valuation of shares. And if you want to value the shares, you need to know what is the valuation of goodwill. So all are interrelated to each other. All are interrelated to each other. Now this valuation, for this valuation, there is no standard. There is no valuation standard. Correct? It means normally we do valuation as per valuer, and valuer has some method as per the industry practice. So whatever valuation we are doing, that we are doing as per industry practice. As per industry practice. Correct? Got this point? Just try to understand, whenever I have a business and I want to sell my business, that will depend upon negotiation. And negotiation will be based on certain facts. And based on some facts, valuation will be done. And for that valuation, we do not have any standard. It depends upon negotiation only. Got this point? So right now, we do not have any valuation standard. Whatever we are discussing as per industry practice. Okay, sir? Yes, sir. Chalega. Means in this particular chapter, we will take a lot of assumptions. Means entire valuation depends upon many assumptions. The first we will start with valuation of goodwill. Then we will start with valuation of shares. Then we will do valuation of business. Now, the chapters which are related to Ind AS, for that I am providing one Ind AS Saransh book. Ind AS Saransh book. Means all the concept of this chapter will be provided in Ind AS Saransh book. But for the chapter which are not related to Ind AS, I will not provide you any concept book. For this, I will give you hand written notes in class only. Means I'll provide class notes for all the concepts. Correct? Means it will be class notes. Means we'll write down all concept in the class. Got this point? Yes, sir. Chalega. Questions are already in question bank. We'll take question from question bank. Understood? Yes, sir. We will start with valuation of goodwill, because first we need to understand valuation of goodwill. Then only we can understand valuation of shares. And once we understand valuation of share, we can understand valuation of business. Okay, sir. We'll start with valuation of goodwill. I think this chapter you might have done in partnership account. You might have done partnership account in your class 12. Then it is quite possible in your foundation syllabus also there was partnership account. In partnership account you have done valuation of goodwill. If you remember, there were 4 methods. Remember? Average profit method, super profit method, annuity method, capitalization method. All that method we are now here to discuss in detail. Means if you have done this particular chapter, a particular topic in your foundation level, so only the formula was given. Explanation was not given why that formula was there. Means formula, you know, there will be some information given the question. You apply formula used to calculate goodwill. Right now we'll do the detailed discussion about that formula. Okay, sir. The first question arises is, sir, what is the meaning of goodwill? What actually goodwill is there? Goodwill, of course, it is an intangible asset. Don't say it is an intangible asset. I have not asked whether it is tangible or intangible. Of course, goodwill is an intangible asset. But what is the meaning of goodwill? Don't say it is means reputation. Just try to, goodwill does not mean reputation. Goodwill does not mean reputation. Correct? So what actually goodwill means? So whatever we are discussing from accounting point of view. We are discussing from what? Financial reporting point of view. So right now, whatever definition I'll give the definition from accounting point of view. Got this point? So goodwill means what? Just try to understand. If suppose there is one person, Mr. Ram, correct? And he started a business today. Got this fine? So of course he will start business today. He will earn some profit. So normally what happens, we say that whenever you start a business, you earn some normal profit, which everyone will earn. Means suppose you become a CA, you started teaching, you'll get some student. Means from the day one, it is quite possible you may get 20 to 30 students. Got this point? So it means anyone who becomes chartered accountant and he started teaching will get 20 students. Means can his fees from that 20 students become normal profit? Correct? So he will be earning some normal profit. Correct? Suppose he is earning 1 lakh normal profit every year once he started a business. But there is one more person, Mr. Hanuman, who has already started his business 3 years before. Correct? My question to you all, whether he will earn normal profit or more than normal profit. So of course, can I say this particular person has already given some past effort, which he has done some past business. So this is his past effort. And due to his past effort, he will be able to earn some extra profit in future. Correct? Means, can I say he will earn some normal profit, which everyone will earn, plus some surplus profit. And this surplus profit is due to this past effort. This is due to past effort. Means can I say any profit which can be earned in future due to past effort is goodwill. Is goodwill. Of course, it arises with reputation, connection, and advantage in the business. Means if I am a chartered accountant, I am teaching from the last 20 years, so I have a connection, I have a reputation, I have some advantage in this business, and because of that reason, I am earning some extra profit. And the extra profit of future which I am earning from this connection arises because of past effort. Correct now. Reputation arises because of past effort. So that become what? Goodwill. So this extra profit, this surplus profit of future is known as goodwill. This is known as goodwill. Got this point? Means write down. If I'll give you the meaning of goodwill, what is the meaning of goodwill? Means can I say in this way? Goodwill means that element arising from reputation, connection, and other advantage of an entity which enable them to earn surplus profit over and above normal profit. So that element is known as what? Goodwill. That element is known as goodwill. Got this point? Correct. You can add on in simple words. Goodwill is sum total of surplus profit due to what? Surplus profit of future. Correct now. You can add on surplus profit of future which arises due to past effort. Means if I am a businessman and in past I have not put any effort, so I will not have any goodwill, because I will not earn any surplus profit because I do not have any past effort. Correct. But in the past, if I have put some effort, and because of that effort I am going to earn some extra profit in future, that is goodwill. Correct. So in accounting terms, goodwill means what? Surplus profit. Goodwill means surplus profit of future. Right on. In other words, you can say, goodwill is the difference between value of business, and value of net assets. Value of net asset. Correct. Means if I say the last para whatever I have written, can I say goodwill is equal to what? Goodwill is equal to calculate a value. We have to find out value of business. From that, you deduct value of net asset. So if your value of business is more than net asset, it means you have goodwill. What do you mean by net asset? Net asset means all asset, correct, but excluding goodwill. All asset minus all liabilities. All liabilities. So this residual amount, the difference, this amount difference will be goodwill. But can you see this goodwill is actually based on value of business. This goodwill is based on value of business. So first it means we need to know how to value business, and therefore this formula will not use in this particular chapter. Means can I say goodwill can be calculated either on the basis of value business or on the basis of value of future profit, means what is the future earning. So in this chapter we'll understand to calculate goodwill based on future profit. Means can I say in this way, the goodwill calculation is either based on future profit or based on value of business. Correct. Now why it is based on value of business right now? Because we don't know how to value business, and therefore we'll not consider this particular part in this chapter. So in this chapter we'll start understanding how to value goodwill based on future earning, based on future profit, So this will be our criteria. How to estimate future profit, because future profit right now we don't know, so we need to estimate future profit. And once you understand how to estimate future profit, then you will be able to understand how to calculate valuation, how to determine the valuation of goodwill. Correct. So in this chapter goodwill will be valued based on future profit. Correct. Now based on future profit we have four methods. First I'll give you the entire method. That on method for valuation of goodwill. Understood? The first method write down. It is known as average profit method. Average profit method. Second write down super profit method. Third write down capitalization method. Fourth write down annuity method. Correct? Are you able to understand what I am saying? Yes, sir. So these are the four methods. Let me first give you the formula for this particular method, then we'll discuss the entire formula in detail. Okay, first write down the formula. So first is what? Method 1. Write down. Method 1 is what? Average profit method. In this, goodwill is equal to can you see, in this, goodwill is equal to future profit multiply by number of years purchase. Now, what is future profit? How to estimate future profit? What is number of years purchase? We'll discuss in detail. First, write down. It is known as future maintainable profit multiply by number of years purchase. Right now we'll discuss. Okay. Now this future maintained profit, we'll call it PYS FMP. FMP. This is known as, we'll call it PYS number of year purchase, NOYP. NOYP. Correct. Now this future maintained profit is also known as average maintainable profit. So if I say average maintained profit and future maintained profit, both are same. Means how much profit you are going to maintain in future. How much profit you are going to maintain in future, that is known as future maintained profit. Future maintained profit. Now how to estimate that? That we need to understand. Now what is number of year purchase? Now if you can maintain your future profit for 4 years due to past effort, so that 4 year become number of year purchase. Got this point? Means suppose due to past effort, I can maintain my future profit for 4 years. So that 4 year become number of years purchase. For 5 years, then 5 year become number of year purchase. Nothing to worry. That number of year purchase will be always given the question. Means we are not here to estimate number of year purchase. That will be always given the question. Okay, sir. Yes, sir. Now coming to method number 2, which is more superior method. Method number 2 is known as super profit method. Super profit method. Now here goodwill is equal to, write down. Goodwill is equal to super profit multiply by. Now can I write down NOYP? Number of years purchase? Yes, sir. You can write down. We write down NOYP. Number of year purchase. So super profit multiply by number of year purchase. So what is super profit? Write down. I'll give you. Where super profit is equal to what? So super profit is equal to future maintained profit minus normal profit. Correct? So now can I write down future maintained profit as FMP? Write down FMP minus normal profit. Normal profit. So what is normal profit? Which can be earned normally, which can be earned, correct now, in our capital employed normally, that is known as normal profit, which can be earned by everyone, that become normal profit. Got this point? Normal profit is equal to average capital employed multiply by normal rate of return. Multiply by normal rate of return. Okay. Now, average capital employed, how to calculate, we'll discuss. Normal rate of return will be always given the question. Means the rate of return which can be earned by everyone, that become normal rate of return in that particular industry. in that particular industry. For example, in our coaching industry, anyone who is becoming CA and coming to this coaching line, everyone can earn 10,000 per month. That is what normal rate of earning. Correct now, normal rate of earning. So on that basis, we can find a normal rate of return. We'll call it PYASE and ROR. And we'll call it PYASE AC, average capital employed. Average capital employed. Got this point? Understood. Now, how to calculate average capital employed, that is a matter of discussion that we'll discuss. But can I say now you have understood the formula super profit multiplied by number of your purchase. Super profit means FMP minus normal profit. Normal profit is equal to average capital employed multiplied by normal rate of return. Now coming to method number 3. Method 3. Okay, sir. So that is nothing but annuity method. Annuity method. Annuity method. Now, annuity method is nothing but present value. I hope you all know about present value. You all know about present value. Correct? Means, if I say in this way, just try to understand. Just try to understand. If I say in this way, let me take one example. This is the date when we are doing valuation. Correct? This is our valuation date. Valuation date. Correct? Means let's say Y0. And we have 4 years of number of year purchase. So Y1, Y2, Y3, Y4. Correct? Got this point? And we have already calculated super profit. Now our super profit is equal to 1 lakh, 1 lakh, 1 lakh, 1 lakh. Correct? Got this point? So under super profit method, what is our formula? Formula is what? Super profit means 1 lakh into 4. So in this case, our goodwill is equal to, we'll say our super profit is 1 lakh and number of year purchase 4. So our goodwill will become 4 lakh. But just try to understand this 1 lakh, 1 lakh, 1 lakh, a present value or future value? It is future value. But we are calculating our goodwill valuation on this date. Means if you want the valuation of goodwill at Y0, so it means the 1 lakh, whatever is future earning, that will be actually earned at year end 1, year end 2, year end 3, year end 4 respectively. But we need to value at Y0. So we need to find out present value of this 1 lakh. Present value of this 1 lakh. So that is known as annuity method. Means when I say annuity of super profit, so what we'll do? We'll say calculate the present value of this present value, this present value, this present value, this present value as per the rate of return given in the question, as per the normal rate of return given in the question. Correct now? So we can find out present value factor multiplied by the future value, and that will give me what? The present value. So that becomes the goodwill. Means can I say in this case goodwill is equal to super profit multiplied by annuity factor. Annuity factor is nothing but sum total of present value factor. Correct now? So we'll say it is annuity factor. In this, I am right now assuming that you know present value concept, because right now you are in CMA final. So of course you have done time value of money. You all know about present value concept. Okay. So if I will do multiply, that becomes the goodwill. So in case of method number 3, goodwill is equal to, that depends upon you are calculating goodwill based on super profit or based on FMP. Means just try to understand what is the difference between method number 1 and method number 2. Here the goodwill is based on future maintained profit. Here the goodwill is based on super profit. Correct? Are you getting what I am saying? So here the goodwill is based on the total profit. But here the goodwill is based on surplus profit. You only say which is better. Of course, can I say goodwill means whatever extra profit, whatever surplus profit you're earning over and above normal profit. So this is the better method. This is only better method. This is better than what? Method number one. But right now we do not have any valuation standard. And it depends upon equation. Suppose just try to understand. I am into monopolistic business. Means I am into monopolistic business. I do not have any competitor. Then whatever I am earning, that is my what? Surplus profit. So in that case, we calculate goodwill based on total profit. In that case, we calculate goodwill based on total profit, and because I have monopoly, can I say whatever I will say, the other person will agree. Just I don't know, I am the only CFR teacher in India. There is no competitor. There is no competitor, and if you want to purchase my business, whatever price I will demand, you will give me, because that is based on what? My upper limit. I have some extra limit. I have some X factor in that. But this point, in that case, we calculate goodwill based on future maintained profit. But in India, there is perfect competition. There is no monopolistic environment. We have what? Competitor India. Therefore, as per India is concerned, because there is no monopolistic market. We have perfect market in India. Therefore, normally we apply super profit method, and we say super profit method is better than what? Average profit method. But can I say that depends upon whether you are using FMP or super profit. So whenever you calculate goodwill based on FMP, apply method number one. Whenever you are calculating goodwill based on super profit, apply method number two. That will depend upon the information given the question. Just see what the question demand. What the question demand. It means, can I say either it will be present value of super profit, or it will be present value of future maintained profit. That depends upon the information given the question. So in this, we have point number A, annuity of super profit. Annuity of super profit. So in this case, goodwill is equal to super profit multiplied by annuity factor. This annuity factor will be given the question. Now we need to calculate annuity factor at normal rate of return for number of years purchased. Annuity factor at normal rate of return, correct, for number of years purchased. Number of years purchased. Okay, sir. So add NROR for number of years purchased. So if they are 4 years, we need to calculate annuity factor for 4 years. Correct? Yes, sir. Understood this point? Have you understood this point? Now, if question asks you to calculate annuity of what? Annuity of FMP. In that case, goodwill will be equal to what? In that case, goodwill will be equal to FMP multiplied by annuity factor at a rate of normal rate of return for number of years purchased. For number of years purchased. Okay, sir. If question is silent, you only say you should give more preference to super profit or FMP. Of course, super profit. Just write down one note. Note. If question is silent, always calculate annuity of super profit. But annuity method will be applied only when specified in question. You only say which one is better, super profit method or annuity method. Annuity method is better, but you will apply only when it is specified in the question. Means better method will apply only if the information is given. If the question is silent, will apply super profit method. This is only from examination point of view. once again, that valuation depend upon the party who is actually want valuation. Got this point? There is no standard for this, and therefore we're discussing in all the cases. Okay, sir. But we need to also focus on examination point of view. I can't teach you practically. I need to teach you from examination point of view. Okay, sir. लिखो annuity method will be applied only when specified in question. Okay, sir. Got this point. Now last method. Last method is what? It is capitalization method. Now what is capitalization method? Right now what we have understood? Just try to understand. Suppose we have 4 years of number of purchase. So I said Y1, Y2, Y3, Y4. And this is 1 lakh, 1 lakh, 1 lakh, 1 lakh. So you have understood super profit method, you have understood annuity method. Okay, sir? Okay. In case of annuity method, what we have done? We have calculated present value of this. And this present value is what? Goodwill. This is at Y0. But sometimes what happens? You can earn super profit for infinite series. Means can I say it can be infinite years? We don't know. Because just try to understand, if I have put some past effort, so my death is certain. But if I am a company is what? There is no, company will never be liquidated. And we apply going concern assumption. So can I say, in that case, that super profit can be earned on an infinite basis. So it means it is what number of year purchase, in that case it will be infinite. So in that case, what is goodwill? Means if I will say you can earn super profit only for 5 years, then to okay, you can apply either super profit method or annuity method. But if I will say you can earn super profit for infinite years, then how to apply? So in that case, you can need to apply one concept of FM. In FM, you have done present value of any amount for infinite years. Means suppose if you are earning 1 lakh, 1 lakh, 1 lakh for infinite years, so your FM teacher, your FM faculty might have said we have one formula to find a value. So in that case, what we do? Cash flow divided by whatever rate of interest is given. So this is known as what? This will be present value. Now how it has derived, that I will not discuss because that is a part of FM faculty. But this is the formula. I hope you have done one concept in FM, how to value equity shares for dividend earned on a consistent basis without any growth for infinite series. So they have given one formula D1 by KE. D1 means dividend by KE. So dividend by KE is nothing but present value of dividend for infinite series. So any cash flow which can be generated for infinite series, your valuation will be cash flow divided by rate of interest. That is the present value of that amount for infinite series. Got this point? So from there, we'll understand capitalization method. So just write down method number 4. Method number, just right now if I'll give formula, then also you'll not ask me what is the explanation of that formula, but I'm here to give that also. Got this point? You need to understand what actually is that the formula mean, and therefore I am explaining that. Okay, sir. So method number 4 is capitalization method. Means this is nothing but present value of super profit or FMP for infinite years. Correct? So here also there are two ways to find out goodwill by using capitalization method. One is capitalization of super profit, one is capitalization of FMP. Okay? Yes, read on. So here first point number A, capitalization of super profit, correct? Means this is the present value of super profit for infinite years. Got this point? In this case, formula will be what? Goodwill will be equal to super profit divided by rate of interest, that is NROR. That is NROR. This is the formula. Super easy formula. Means as the formula is concerned, it's very easy. But you need to understand what is the meaning of this formula. That's why I am explaining. Okay. Now let us expand this formula. Let us expand. So can I write down? This super profit is nothing but FMP minus normal profit divided by NROR. Can I say in this way? It is nothing but FMP divided by NROR minus normal profit divided by NROR. Correct? Normal profit divided by NROR. And just try to understand. In our previous discussion, I have given one formula for normal profit. Normal profit is average capital employed into NROR. Means what was the formula? I have given normal profit. I am writing here. Normal profit is equal to average capital employed multiplied by NROR. So can I say in this way? The average capital employed is equal to normal profit divided by NROR. Means can I say instead of normal profit divided by NROR, can I put average capital employed? So can I write down here instead of this, can I write down average capital employed? So your formula will become FMP divided by NROR minus average capital employed. Average capital employed. You can use this formula also. Either you can use this formula or this formula. So I have derived it. So sometime in your study material they have used this formula. So I am just here to inform you that this formula and this formula will give one similar answer. They will not give different answer. They will give similar answer. Therefore, you can apply this or this. Okay, sir. Got this point? Chalega. Now, so this was the capitalization super profit. Now write down capitalization of FMP. Point number B. Capitalization of what? FMP. So what does it mean? This is the present value of FMP for infinite years. What is the formula? So here the formula is goodwill is equal to FMP divided by NROR minus closing capital employed. Closing capital employed. Now you might be thinking, so what is the difference between closing capital employed and average capital employed? That I am going to discuss. Just write down. Correct. So here goodwill is equal to FMP divided by NROR. FMP means total profit. Total profit. Just try to understand. If you are earning 10 lakh every year, and if you divide by NROR, you are getting the present value of that. Means this is nothing but value of business. This we call value business. When I will teach you value business, so one way to find out value business is the present value of FMP for infinite series. Correct now. So this is nothing but value of business. Value of business. And capital employed is nothing but all asset minus all liability. So the difference will be goodwill only. The difference will be goodwill. Got this point? So this is also one way. But here we are calculating value of business. So whenever we do FMP divided by NROR, we'll get what? Value of business, and capital employed This closing capital employed is nothing but it is net asset. It is nothing but net asset. Net asset means what? All asset minus all liability. All asset minus all liability. So this is what capitalization of FMP. But can I say capitalization method will be used only when number of years purchase is not given. Whenever number of years purchase given, you can use either average profit method or super profit method or annuity method. So whenever number of year purchase is not given, it means it is an indication that you need to use capitalization method. Okay, sir, write down. Note. Write down note. Point number A. Whenever number of year purchase is not given, then value goodwill by using capitalization method. Second item. Of course, can I say capitalization of super profit, capitalization of FMP? Which one is better? Capitalization of super profit is better. If question is silent, use capitalization of super profit, not capitalization of FMP. Okay, sir. Madam. If question is silent, always use capitalization of super profit. However, sometimes what happens, they mention use closing capital employed. It means, can I say in that case we need to use capitalization of FMP, not capitalization of super profit. Just write down. If question require closing capital employed, then use capitalization of FMP. Capitalization of FMP. Correct. Okay, sir. Now to sum up, whatever method 1, 2, 3 I have done, let me explain. You can say when I say goodwill, so either it is based on super profit, either it is based on super profit, or it is based on FMP. Either of these means either you can use super profit for valuation of goodwill or you can use FMP for valuation of goodwill. Correct? FMP, whenever you are using FMP, it means it is has monopoly business. Monopoly. Correct? Whenever I am using super profit means actually there is no monopoly. So super profit is actually better than FMP in India. Correct now. So whenever you are using FMP, it means that business has monopoly in that industry. Monopoly in that industry, but that is not practically possible in India. Okay, sir? Yes, sir. Now when I am saying either average profit method or super profit method, correct? What is the formula? So if I am saying average profit method, as I know, method 1 and 2. What is the formula? Your super profit multiply by number of years purchase. Here it is FMP multiply by number of years purchase. Correct. When I say method number 2, so here super profit multiply by annuity factor. Here FMP multiply by annuity factor. When I say method 3, So it is super profit. Right on this way. It is super profit divided by NROR. Here it is FMP divided by NROR, but minus closing capital employed. Here you can also say or FMP divided by NROR minus average capital employed. Average capital employed. This is the what I will say entire explanation. So you can see whenever you are using FMP, this is the formula. Whenever you are using super profit, this is the formula. Okay, sir. Super profit need to give more importance than FMP for calculating what? Goodwill. However, super profit is based on FMP, means whenever you are calculating super profit, you want FMP because super profit is FMP minus normal profit. Are you able to understand? It means actually there are how many factors? How many factors to calculate goodwill? One is FMP you want. One is FMP you want. One is average capital employed you want. Average capital employed means you want FMP. You want average capital employed and you want normal rate of return. Normal rate of return will be always given the question. Just write down. There are actually three elements. Three elements for valuation of goodwill. Point number A, FMP means future maintainable profit. Second is average capital employed. Average capital employed. And third is normal rate of return. Number of purchase that will be given the question. From exam point of view, this normal rate of return will be also given the question. But then also we'll discuss something. But normally it is given in the question. It means right now we should focus on how to calculate FMP and how to calculate average capital employed. This will be our focus. Once we understood how to calculate FMP, how to calculate average capital employed, all questions you can do by your own. So that will be our focus. That we'll discuss after break. Okay, sir. So we'll take a small break. After break, we'll discuss how to find out future maintained profit, how to find out average capital employed. Okay, sir. Yes, sir. Now, can we start once again, everyone? Okay. So before break, we were discussing about method for the valuation of goodwill. We have discussed that there are four methods. First is average profit method, then super profit method, then annuity method, then capitalization method. Average profit method, what is the formula? So goodwill is equal to FMP multiplied by number of years purchased. Super profit method, what is the formula? Goodwill is equal to super profit multiplied by number of years purchased. Then annuity method, the formula is what? If you are calculating goodwill based on annuity of super profit, then goodwill is equal to super profit multiplied by annuity factor. Otherwise, it is goodwill is equal to FMP multiplied by annuity factor. Capitalization method, if you are using capitalized super profit, then goodwill is equal to super profit divided by NROR, or you can say FMP divided by NROR minus average capital employed. But if you are doing capitalization of FMP, then goodwill is equal to FMP divided by NROR minus closing capital employed. This much we have done. Then we discussed that actually there are three elements which are very important for the valuation of goodwill. First is the future maintainable profit, how to estimate future maintainable profit. Then how to find out average capital employed. Then what is the normal rate of return. So first we'll discuss about future maintainable profit, rate on future maintainable profit, FMP. FMP FMP cannot be actual, it need to be estimated because we can't find out actual future profit. So we need to estimate it. So FMP is an estimated profit. Correct. Based on past year profit. Based on past year profits. It means, can I say, in the past year we have already generated profit. We will take that profit as a benchmark to estimate future profit. Normally what happens? How much we have earned in the last year, that give an idea that how much we can earn in future year. Got this point? So what this chapter says that you need to estimate future profit based on what past year profit. Let's say, right now we are discussing how to calculate. I don't calculation of FMP. So of course in exam they will give you either past year, 1 past year, or 2 past year, or 3 past year, 4 past year, 5 past year, any past year. Depending upon that we'll calculate it. So let's say normally they give 3 past year. So I'm just writing this is past year 1, past year 2, this is past year 3. Okay. Now, so they will give you profit after tax. They will give you profit after tax of this past year. Correct. So first what we should do, we should first calculate profit before tax. What is the profit before tax? So if you want to calculate profit before tax, what you do? You will add back tax expense. You will add, in this will add tax expense. Once you will add tax expense, what you will get? Profit before tax. Profit before tax. We call it PAT, and this we call it PBT. Okay. I think this too you have understood. So our starting point to calculate FMP will be PBT, because normally from future profit will deduct future tax. So first we'll find out what is the profit before tax. It is as simple as just try to understand. Suppose your 1 lakh is the PBT. From this you deduct tax expense of 30,000. So your PAT net profit is 70,000. If they have given 70,000, but you want 1 lakh, you need to add tax expense. So that's why we have added. That's why we added. So why we have added tax expense, I hope you understood. Why we have added tax expense, that we have understood. Now, from this some adjustment is required. From this some adjustment is required. Let us understand what are the adjustment which is required to be done. Now, whenever we prepare profit and loss account, I'm just preparing TSAP so that you can understand. So here there will be income, all income write down, correct? And here we write down to all expense. Now there are some expense which are actually of non-operating in nature, and there are some income which will be of non-operating income. For example, if I say we have invested outside a business, so we are earning some interest income. Can I say goodwill will not affect your interest income? Means even though you do not have goodwill, you will earn that interest income. Just try to understand. I invested 1 lakh in a bank. I'll get 5% return. And you also invested 1 lakh in a bank. So you will also get 5% only. So can I say that does not depend who is investing. Everyone will get same rate of return. So goodwill will not affect your non-operating income. Correct? And therefore, what our valuation criteria say that the FMP should be only operating item, not non-operating item. Therefore, can I say to calculate this PBT, we have added non-operating income. We have deducted non-operating expense to be nullified. So if you want to nullify it, you need to add back expense, non-operating expense. You need to minus non-operating income. Got this point? That is the first adjustment. Second, can I say there will be some abnormal loss? Correct. There may be some abnormal income, abnormal loss, abnormal income means which not happen every year. Means if I say just one example, any fire occurred and there is some loss, so that will not happen in future. So fire destroyed your entire stock, that become abnormal loss. Whether it will happen in future, that will not happen in future, and we are here to find out future profit. Got this point? So any abnormal loss, any abnormal income will be also eliminated. It is as simple as there may be some non-recurring income, non-recurring expense. For example, any gain on sale of land. So that land will not be sold in future. Correct now. So that need to be also what eliminated. To any expense, any loss which are of non-recurring nature, that should be also eliminated. That will be also eliminated. So three elimination will do. One is a non-operating item, one is abnormal item, one is non-recurring item. Got this point? These three elimination is required. So for that, what we'll do? Just write down. Right now. So we'll do. Can I say plus minus non-operating item? When I'm saying plus minus, it means expense will be plus and income will be minus. That you have understood or not? Because here to calculate this PAT, income has been added. You want to eliminate it. So now you need to minus it. You need to deduct it. You need to remove it. And expense is already deducted. So you need to add back it. You need to add back it. Okay, sir. It is as simple as just try to understand. If I will say your operating profit was 1 lakh. Now your non-operating income is 20,000 and your non-operating expense is 10,000. So what is PBT? 1 lakh 20 minus 10, 1 lakh 10,000. Now from 1 lakh 10,000, you want this 1 lakh. What you do? You will plus 10,000 minus 20,000. So in this 1 lakh 10,000, what we'll do? We'll do plus non-operating expense and minus non-operating income. So automatically you will get what? 1 lakh and you'll get operating profit. Understood? So what we'll do? We'll do, I'm adding plus minus, chalega na? Plus minus non-operating items. non-operating item. For example, interest income on investment. Interest income on investment. Correct. Second example, a rental income on investment property. Mean there is some property which you have given rent, on that you are generating rental income. That property is known as investment property. Okay. Okay, sir. Understood. Example I have given. Then do plus minus non-recurring expense. Non-recurring means which do not happen every time, which happen on a what? Infrequent basis. Correct? Which do not occur frequently. That is non-recurring. Non-recurring item. For example, you can say gain or loss on sale of PP, etc. I'm giving one example. Okay. Then a plus minus abnormal item. Plus minus abnormal item. So we can say plus any loss due to earthquake, any loss due to fire. Example, loss due to fire, etc. Loss due to earthquake, so of course that can be also considered non-recurring. Loss due to fire also can be considered non-recurring. I'm just writing all points so that you can understand. Non-operating, abnormal, it can be non-recurring. All this will be eliminated. Okay, sir? Chalega? Yes, sir. Any doubt? So that will be eliminated. You can eliminate it. Okay, sir. Then there can be some error also. It is quite possible in the past year there was some error. That profit need to be rectified. So that error will be given in the question. So that profit need to be rectified. So we need to do some plus minus rectification of error. Means due to that rectification, either your profit will increase or decrease. That will depend upon the information given in the question. So write down plus minus any rectification of error. Correct. Then a plus minus any revaluation of current asset and current liability. Means if there is some current asset or current liability and that is revalued, so there can be gain or loss. So that gain or loss need to be adjusted. Okay. So any revaluation gain or loss of current asset or current liability need to be also adjusted. Correct, because that will also affect the profit. Right on. Revaluation gain or loss of current asset and current liability. Understood. Just try to understand these first three are elimination. This you are eliminating. Correct. So in this case, any expense will be plus, any income will be minus. Correct. But these two are not elimination. This to your recording. So here, any gain will be plus, rectified profit will increase now. So if there is an increase in profit, you need to plus it. So here, if there is a gain, it will be plus. If there is a loss, it will be minus. Be careful about that. So first three is actually eliminating. What you have recorded, you are nullifying it. So if you recorded some expense, so you will add back. If you have already recorded some income, you will minus. But here too, you are just doing adjustment for the gain and loss which was not recorded. So any gain which was not recorded, now you are recording. So that will be plus. A loss which was not recorded, now you are recording. That will be minus. Understood? Correct? Then do any plus, add amortization or impairment loss of goodwill. Correct? Means just try to understand if there is some what goodwill and that goodwill is amortized or impaired, so that has been charged to PL account. So that profit whatever we have got from the past year, that is profit after amortization or after impairment of the goodwill. What is the objective of the chapter? To calculate goodwill. So we are doing valuation of goodwill. So we want profit before amortization of goodwill. So we want profit before amortized goodwill, and therefore we have added amortization or impairment loss of goodwill. Okay, sir. So this will give you. We have taken 3 here. So this adjustment will give you. This is known as adjusted profit. We call it what? After this adjustment, we call it adjusted profit. Adjusted profit. And now we need to find out average profit from this adjusted profit. Correct? Got this point? So this, if we calculate average of this 3 years, so that is known as average maintainable profit. We call it average maintainable profit. Got this point? So it is known as average maintainable profit. Average maintainable profit. Okay. Now, whenever you are doing average, you will get now one amount. This average can be either simple average or weighted average depending upon the information given in the question. Now, when to apply simple, when to apply what? Weighted, that we need to understand. So it can be either simple average, or it can be weighted average. It can be weighted average. This much you understood. Now, if the question is not giving any further information, then this is the only answer. Then, therefore, I say FMP sometimes is known as average maintainable profit also. So, if there is no other information given, so this is the only answer. Then your AMP will be FMP. AMP will be FMP, but some other information might be given. There may be some additional expense of future. Means in future some additional expense will incur, so that will minus. In future some additional income will generated, that will be added. Got this mind? So that will depend upon the information given in the question. So if there is some additional income, so what we'll do? We'll do plus add future additional income. From this we deduct less future additional expense. From this we'll also deduct additional depreciation on revaluation of PP or intangible asset. PP means what? Property, plant, equipment. That is nothing but fixed asset. Okay, or intangible asset. Just give star mark. Right now I will not explain. I will explain this point in our further classes. Okay, got this one? Just write down and leave it. So this will deduct. This is known as FMP. This is known as FMP. Okay, this is FMP before tax. This is FMP before tax. From these, will minus less future tax expense. So of course they will give you some future tax rate. Based on that, we'll calculate future tax expense. Once we deduct that, we'll get FMP after tax, and normally we call it FMP, future maintainable profit. This is the entire explanation, yeah, entire calculation part of FMP. Got this point? Abhi, there are some points which are left for discussion. Intentionally I have left, but thoda you have understood. Thoda. So what we have done? First we have taken past year profit. Now past year profit we have adjusted to find out what can be the future possible profit. Ignoring all non-recurring item, any non-operating item, any abnormal item, correct now, and rectification, everything has been done. Then whatever adjusted profit we are getting, we will find out average. So that average can be either simple average or weighted average. Now we need to understand when to use simple, when to use weighted average profit. That is also a matter of discussion. So this is also a point which you need to discuss. So let us understand whether we'll use simple average, when to use simple average, when to use weighted average. Okay, so just write down. Write down. How to calculate average profit. How to calculate average profit. So that depends upon whether profit margin has been given or not. First, you need to ask one question, whether profit percentage means what is the profit ratio. Profit ratio you can say, profit margin you can say. Profit margin is given. Profit margin means what? What do you mean by profit margin? When I say profit margin, it means profit divided by sales into 100. Means whether sales information has been given or not. If sales information is given, profit information is given, you can find out profit ratio. That is given. That is yes, no. Yes, no. So it means if yes, then we need to identify trend in profit percentage. Correct? Okay, let's write down, I will explain. We need to identify trend in profit percentage. Write down. If write down. If that profit percentage have increasing or decreasing trend. If profit percentage has increasing or decreasing trend, then apply. You are not able to understand anything, I will explain, just write down. Apply weighted average. However, if profit percentage has no trend, means neither increasing nor decreasing trend, then apply simple average. Okay, what is fine. But if the profit percent is not given, then we to identify trend in adjusted profit. Adjusted profit, you know, this is the adjusted profit. This is adjusted profit. Okay, then we to apply trend in adjusted profit. Okay, sir. Then identify. identify trend in adjusted profit. In this also same, if adjusted profit has either increasing or decreasing trend, then apply what? Apply weighted average. If no trend, if there is no trend, then apply what? Apply simple average. Got this point? Correct? Sir, not able to understand. Sir, explain. I will explain. First, have you understood what I want to say? I just want to say that adjusted profit, from adjusted profit, we need to find out, from adjusted profit, we need to find out average profit. Now, whether average will be done on simple basis or weighted average basis, that we are discussing. Sir, do you know about simple or weighted? That also I need to explain now. Just write down. Example. Example. Example number 1. So this is year 1, year 2, year 3. Suppose the profit is 1 lakh, 1,20,000 and 1,40,000. You can see it has one increasing trend. This is increasing trend now. This is known as increasing trend. And therefore we'll apply weighted average. So in this case we'll calculate weighted average profit. Now how to calculate weighted average profit? That also we need to find out. Weighted average profit will be equal to what? Will be equal to. So what we'll do? We'll give more weight to recent year. More weight. Weight means importance. Means, can you see, if this is the recent year, the chances of profit in the coming year will be similar to 1,40,000, but not 1 lakh now. So we'll give more importance to 1,40,000. Got this point? Are we reading? Means this is 2001. If I am saying this is 2001, this is 2002, this is 2003. So our next year 2004. So 2004 profit will be similar to 2003 or 2001. 2003, it means we'll to give more importance to 2003 profit. Okay. In this case, what we'll do? We'll give more weight. Weight means importance. So if I give one weight, 1 point to what? 2001. It means I'll give 2 times importance to 2002 profit. And I will give 3 times importance to what? Third year profit. Means 2003. Got this point? So this is 1 time importance. This is 2 time importance. This is 3 time importance. Means I am giving more importance to recent year profit and then divide by number of weight. 1 plus 2 plus 3. This is weighted average profit. So in this, what is the average coming? So 1 lakh plus 1, 1 lakh into 1. So it is 1,40,000 with 3 plus 2,40,000 plus 1 lakh. That becomes 7,60,000. 7,60,000 divided by what? It is 6 divided by 6. It is coming how much? 1,26,667. Got this point? This is the average profit. This is the average profit. Let me come to second example. Example number 2. Same here. Now the profit is 1 lakh 90,000 and 80,000. So this is decreasing trend. The profit is decreasing now. We call it decreasing trend. This is decreasing trend. In this case, how to calculate? In this also we need to give more importance to recent year. Now you will say you'll give more importance to first year, second year, third year. Third year, because if the profit is 8,000, so it is high chances the profit of the coming year will be near to 80,000. It will be near to 80,000. Got this point? So here are the same thing. We'll say weighted average profit will be equal to 1 lakh into 1 plus 90,000 into 2 plus 80,000 into 3 divided by 1 plus 2 plus 3. Correct? Now the question arises, why you are giving 1, 2, 3 weight? If the question is silent, we'll give weight on our basis. But sometimes question says give weight 2, 4, 6. So they will give 2, 4, 6. If they will say give weight 10, 20, 30, we'll give 10, 20, 30 as per the information given in the question. But if the question is silent, we'll give 1, 2, 3. Okay, sir. Yes, sir. So this will be how much? This is 80,000 into 3 means 2 lakh 40 plus 1 lakh 80 plus 1 lakh. It is coming 5 lakh 20. So now 5 lakh 20 divided by 6 is equal to how much? It is 86,667. 86,667. You can see here also it is near to what? Somewhere it is what? Near to 1 lakh 40. Means it will not be exactly near, but the trend we are applying. Okay, sir? Yes, sir. Now third example right now. Right on third example. If the profit is like this, 1 lakh, then 1 lakh 20, and then suddenly it becomes 90,000. You can see it is increasing, then decreasing. It means there is no trend. No trend. And therefore we'll apply simple average. So in this we'll calculate simple average profit. Means will not give importance to the recent year. That will not be correct now. Because it may increase, it may decrease. We don't know. We will not give more importance to recent year. We'll give equal weight to each year. Each year. So it will be 1 lakh. In this 1 lakh plus 1 lakh 20,000 plus 90,000. So we are giving equal weight or multiply by 111. Correct now. Divide by 3. That is what? 1 lakh plus 1 lakh 20,000 plus 90,000 means 3 lakh 10. Divided by 3. That is 1 lakh 3,333. Okay, sir. So sometime what happened? Fourth. Suppose they have given 1 lakh. 1 lakh 20,000 and let's say 1 lakh 80,000. You can see there is a, if you see there is a trend in profit, but with this they will give also what? Profit percentage. Means this is the profit and they have given profit percentage. Means profit percentage is calculated based on sale. Based on sale. So they may give sales and you can find out profit percentage by your own. I'm just directly giving profit percentage. This is 10%, then 12%, and actually this is 9%. Quite possible. You can see here it is increasing, but it is increasing, then what? Decreasing. So in this we'll see the trend in profit percentage. Because there is no trend in profit percentage, you'll apply but a simple average, weighted average. If the profit percentage is given, you need to identify trend in profit percentage, not in profit. Got this point? In this case, we'll apply simple average. Simple average. If there is some increasing or decreasing trend in profit percentage, then we'll apply what? Weighted average profit. So because there is no trend, we'll say simple average profit, and then will be 1 lakh plus 1 lakh 20,000 plus 1 lakh 80,000 divided by 3. Correct. So 1 lakh plus 1 lakh 20,000 plus 1 lakh 80,000 is equal to what? 4 lakh divided by 3. It is 1,33,333. Okay, sir. However, normally it has been seen that in CMA exam they don't ask this type of question. No question in ICMI material. However, I have taken one question from CA material. In that we have similar type of question. So seeing the trend, they may ask that question also. I have taken that question and I am giving this concept. But there is no question in ICMI material regarding this particular point. Understood? Have you understood this point? Yes, sir. So you have understood what is what? How to calculate average profit. Okay, sir. Now we are in a position to take some question. Take question, but that require this understanding also. So let us take some question. We'll do a revision of that FMP 1 second after that question. We'll take some small question. So you have question bank. Come to chapter number 17. We are doing right now chapter number 17. Okay. Let me open the PDF. You can see chapter number 17, valuation. The first unit is what? Valuation of goodwill. Okay. So first we'll take a small question. Come to question number 1. XYZ, a partnership firm, earned profit during the past 5 years as follows. You can see profit is given 17, 18, 19, 20, 21. Profit is given. Determine the value of goodwill in each of the following independent cases. Case number A, it was decided to value goodwill on the basis of 2-year purchase of average profit of the last 5 years. Average profit of the last 5 years. You can see there is a trend. So normally if there is a trend and question is started, we should use what? Weighted average profit. You can see increasing. But in this question, normally in case number B, they have asked what? They have asked to give weight. Correct now. So we'll assume this they want simple average. Only from what? This question point of view. Because in case number B, they have asked you to calculate weighted average profit. So in case number A, we'll apply simple average profit. But if the question is signed, only one question has been given without any situation. So in this actually there is a trend and we should apply weighted average profit. Right now we are understanding simple how to calculate, weighted how to calculate. Got this point? Yes, sir. So coming to question number 1. We are doing question number 1. Question number 1. Case number A we are doing. Case number A. First, we'll find out average profit. Average profit. So can you give me the sum total of these? 27 plus 27,000 plus 36,000 plus 37,200 plus 42,000 plus 46,800. It is coming 1,89,000. It is 1,89,000 divided by 5. So divide 5, how much? It is 37,800. 37,800. Therefore, goodwill will be equal to. Now we can write average profit or FMP, whatever you want to write. Correct now. So I'm writing average profit, either average maintainable profit or FMP, whatever you want to write down. So can I write down average profit? Average this is nothing but FMP multiply by number of year purchase. This is what? 37,800. Number of year purchase, it is given the question 2. Check karo. So into 2. The answer is 75,600. Answer is 75,600. Okay, sir. Chalega? Yes, sir. Next point. Case number B, it was decided to value goodwill on the basis of 3.5 years purchase. So this is number of year purchase of average profit of the last 5 years after giving weight 1, 2, 3, 6, 8. Now they have given 1, 2, 3, 6, 8. You would apply 1, 2, 3, 6, 8 only of the profit to the profit chronologically, means in the same order. In the same order. Okay, sir. We'll apply. We are doing case number B. Case number B. So in this now we'll apply weighted average profit. Weighted average profit. So weight is what? 1, 2, 3, 6, 8. The first profit is what? First profit is 27,000 into 1. Then 36,000 into 2. Then 37,200 into 3. Then 42,000. This is 1, 2, 3, 6, 8 into 6. And the last one is 8 now. It is 46,800 into 8. Got this point? Divided by what? Sum total of weight 1 plus 2 plus 3 plus 6 plus 8. Can you just calculate it? As per my calculation, the numerator is what? 8,37,000. Just calculate it. Divided by what? 20. What is the answer? Answer is 41,850. So 8,37,000. Just check it. Okay. This is coming 41,850. Now, therefore, goodwill is equal to what? Once again, average profit. Whether simple or weighted, you need to write down average profit only. It is average profit is nothing but FMP multiplied by number of year purchase. Average profit is 41,850. Number of year purchase 3.5 year. Into 3.5, it is coming 1,46,475. 1,46,475. Understood? Simple. Can we take case number C? Case number C, it was decided to value goodwill on the basis of 3-year purchase of weighted average profit of last 5 years, giving maximum weight to the recent year. Now in this weight is not given, so we will need to apply 1, 2, 3, 4, 5. Now we can't say 1, 2, 5, 9, 10, as not. 1, 2, 3, 4, 5. More weight will be given to recent year. Okay, sir. So case number C. Case number C. Write down. Weighted average profit. It will be 27,000 into 1 plus 36,000 into 2, then plus 37,200 into 3, then plus 42,000 into 4, then plus 46,800 into 5. 1, 2, 3, 4, 5. That you understood? बोल रहे चलेगा? Yes, sir. Just calculate the numerator and divide by what we'll do? 1 plus 2 plus 3 plus 4 plus 5. So how much numerator you are getting? From my point of view, it is 6,12,600 divided by 15. So 6,12,600 divided by 50, it is coming 40,840. It is coming 40,840. Therefore, goodwill is equal to average profit is 40,840 and number of year purchase they have given 3 into 3. So into 3 how much? This is 1,22,520. Simple, easy. Abhi, this is very simple. Complication will increase. Right now, only first day, I'm not taking big questions. Okay, sir. Case number D. It was decided to value goodwill on the basis of 2.5 years purchase of simple average. Now it is given simple average. Once it is given simple average, even though it is trained, can you use weighted average? No, Baba, no. Once it is given simple average, now you can't use what? Weighted average. Okay, sir. Of the last 5 years, in this regard, the following were observed. An abnormal loss of 1,800 was charged against 2019. Means in this year there's some adjustment is required. Profit of 2020 include a non-recurring receipt. Non-recurring receipt. So 2020 non-recurring receipt is there. And closing stock of 2021 was overvalued by 2,400. So it means it was overvalued. It means you decrease closing stock. When you decrease your closing stock, your profit will decrease. So 2021 some adjustment is required. These three adjustments are required. Okay, so can we do this adjustment and then we'll do simple average? Write down question number, case number D we are doing. Case number D. Okay. So now in this we'll do calculation of FMP or AMP, average profit, whatever you want to write down. Calculation of FMP. You have how many year? 2017, 18, 19, 20 and 21. What is the profit given? It is 27,000, 36,000, 37,200, 42,000 and 46,800. These are the profit given. First they have given that in the 2019 there is an abnormal loss. So you need to eliminate abnormal loss. You will do plus minus. Plus loss already deducted. Now you do plus it. Right on. Plus abnormal loss. Of which year? 2019. What is the amount? 1800. Okay. Then what is given? Check करेंगे. Then in the year 2020, profit include a non-recurring receipt income. So we'll minus it. Non-recurring income minus non-recurring receipt. Of which year? 2020. What was the amount? 2,500 minus. Then in the last year, closing stock of the last year was overvalued. It means you decrease closing stock. Just try to if you decrease closing stock, if you decrease your closing stock, correct now? If you are decreasing your closing stock, your profit will also decrease. Correct now? So increasing closing stock, your profit will increase. Decreasing closing stock, your profit will decrease. Understood point? Correct? So decrease, write down, minus, write down, over valued closing stock, how much profit will decrease? 2,400. So this become your adjusted profit. Adjusted profit. This is 27,000. This is 36,000. This is 39,000. Okay, this is 39,500 and this is 44,400. Okay, sir. Now I'll do simple average profit. Simple average profit. Sum total of these divided by 5. So 27,000 plus 36,000 plus 39,000 plus 39,500 plus 44,400. Oh. It is coming how much? It is coming 1,85,900. 1,85,900 divided by 5. So 1,85,900 divided by 5. It is coming 37,180. 37,180. What is the goodwill? Goodwill is equal to average profit. Average profit is how much? 37,180. And number of year purchase was how much given? Check karo. That was 2.5 year. That you need to check. Okay, every question they are changing the number of year purchase. So 2.5 year. 2.5. So into 2.5, how much it is coming? 92,950. 92,950. Understood. So with this first question, we have understood when to calculate average, whether simple weighted average, what is the way of doing weight, and also in last we have understood what are the adjustment may be required. Okay. Let me take one more question. Simple question we are taking. Question number 2. XY Limited, a partnership firm. XY Limited partnership firm. Okay. Company and partnership firm. How? Limited means company na. Chalo chodo. And profit during the past 4 years. So they have given past 4 year profit. Firm has a total asset worth rupees itna. And his current liability include only creditor itna. The normal rate of return is 10%. Determine the value of goodwill on the basis of 2.5 year purchase of super profit. Now super profit. Chalo. Okay, we'll do. So we are doing question number 2. Question number 2. Now in this, first we'll calculate super profit. For that one, we want average profit. Correct now. Means super profit means what? Average profit minus normal profit. Yeah, FMP minus what? FMP minus what? Normal profit. Are we getting? So first we'll calculate average profit. Means FMP. So they have given 42, 46, 52 and 46,500. You can see here decreasing, here increasing. No trend. So we'll use simple average. So 40, because there is no adjustment, directly we can do 42,000 plus 46,000 plus 52,000 plus 46,500 means 1,86,500. It is 1,86,500 divided by 4. Divided by 4 is coming 46,625. The average profit. It is from this will deduct normal profit. Normal profit means what? Capital employed multiplied by normal rate of return, and capital employed for the time being we'll do detailed discussion of capital employed. It is mean total asset minus total liability. So they have given total asset minus total liability 82 minus 12,800. So 82,000 minus 12,800. It is coming 69,200. So 69,200. And they have given normal rate of return. Check karo. What is the normal rate of return they have given? That is 10% they have given. This is normal rate of return given 10%. So multiply by 10% is coming 6920. 6920. Okay, sir. So what is super profit? The super profit is equal to what? 46,625 minus 6920 is equal to 39,705. 705. This becomes super profit, and therefore goodwill is equal to. Therefore, goodwill is equal to super profit multiply by number of year purchase. What is super profit? 39,705. What is the number of year purchase? Bata. The number of year purchase given. How much? 2.5 year. So multiply by 2.5 year. So multiply by 2.5 year. How much it is coming? That is goodwill is equal to 99,262.50. Means you can do rounding off also. You can make it 263. Okay, sir. This question number 2 also done. Any doubt? Means you can add on. This is okay. One more question. Come to question number 3. From the following particulars, you are required to determine value of goodwill. Super profit computed. They have given super profit. Normal rate of return given 12%. Present value of annuity of ₹1 for 4 years at 12%. 12% is normal rate of return. 4 years is number of year purchase. And they have given annuity factors. Super easy. In this nothing to do. Super profit multiply by annuity factor, that is goodwill. Means we are doing question number 3. Goodwill is equal to super profit multiplied by annuity factor. Super profit how much given? That is how much? 4,50,000. 4,50,000 into what is the annuity factor 3.0374. 3.0374. So 4,50,000 into 3.0374. 3. Okay, sir. This is coming how much? 13,66,830 is the goodwill. Okay. Chalega. Now, just try to understand. Suppose the annuity factor is not given. So they have given 12%. For how many years? 4 years. So that you can calculate. So how to calculate this annuity factor that you know? What you will do? First, type 1.12 because 12% now. So formula is 1 plus R by 100. So R by 100 means 12 by 100 means 0.12. So 1.12. First type 1.2 in your calculator. This you know I am just doing a recap. Because if you have done FM, you know how to calculate annuity factor. So first you type 1.12 in your calculator. Okay. Then do divide. Okay. Then do equal to. How many times? 4 times because they have 4 years. So first equal to. It is coming how much? 0.8928. Take 4 decimal. 7 equal. Second equal to 0.7972. Then third equal to 0.7118. Then fourth equal to 0.6355. Now make a sum total of these. This sum total will be equal to this. Check karo. 0.8928, 0.7972, 0.7118, 0.6355 is equal to. Exactly means there is one difference coming. Our answer is coming 3.0373 and it is 3.0374. Approximately same. Means if you don't know, you can calculate this. It is quite possible it is not given the question. So you need to calculate it. But high chances they will give annuity factor. Nothing to worry about that. Understood? Let me take one more question. Coming to question number 4. The following details relate to Messrs XYZ. Average profit of last 4 years. Average profit is given. Average capital employed is given. Normal rate of return is given. Present value of annuity 1 for 4 years. 10% they have given. Once again annuity factor to determine the value of goodwill on the basis of annuity of super profit. So in this first we need to calculate super profit. Then apply annuity method. So do question number 4. We are doing question number 4. This is a very simple. This type of question they will never ask. Okay. So first we need to calculate super profit. Super profit means what? Average profit means FMP minus what? Normal profit. Average profit is given the question. How much it is given? So average profit is given 7 lakh. And normal profit we can calculate. They have given average capital employed. How much average capital employed that is given? Check karo. It's 55 lakh and NRY is given 10%. So 55 lakh multiply by 10%. It is 7 lakh minus 5 lakh 50,000. So 7 lakh minus 5 lakh 50,000. It will become 1 lakh 50,000. So super profit is 1 lakh 50,000. Now we can find out goodwill. So goodwill is equal to super profit multiply by annuity factor. Super profit already we calculated 1 lakh 50,000 multiply by annuity factor. That is also given. How much given? 3.1699. 3.1699. So 1 lakh 50,000 into 3.1699. It is coming how much? 4 lakh 75,485. 4 lakh 70,485. Understood? Let's check the answer. Same answer is coming. Once again, this is not given. We can find out what we will do. 1.10. Then divide equal to how many times? 4 times, just write down, make a total, you will get the same if it is not given. But suppose if you are not getting the same, suppose this is wrong, so you need to use whatever is given in the question. You can't correct it. Whatever annuity factor is given, that you need to use it, even though it is wrong. Okay, sir. Yes, sir. Last question for today. Question 5. A firm value goodwill under capitalization profit method, means capitalization method. Its average profit for the past 4 years has been determined at 70,000. Net asset and capital employed in the business is 4,80,000 and 5 lakh respectively. Okay, and its normal rate of return is 12%. And the normal rate of return is 12%. Okay, got this point? Are you able to understand? Correct. Okay, sir. Now, whenever they give net asset, it means it is closing capital employed. Whenever they say capital employed in this chapter, that is actually deemed to be average capital employed. That is understood. Because we want average capital employed. We don't want closing capital employed. Correct? So if they have given capital employed, it means average capital employed. When they give net asset, means all asset adherent minus all liability adherent. So that becomes closing capital employed. That is understood point from the examination point of view. So whenever they give net asset, that is means closing capital employed. Whenever they give capital employed, it means it is average capital employed. Got this point? So that is 4,80,000 and 5 lakh, and its normal rate of return is 12%. So determine the value of goodwill based on capitalization of average profit. Average profit means FMP. FMP. Okay. So question 5, question 5, we are doing point number 1. So here goodwill is equal to, our formula is what? FMP divided by NROR minus closing capital employed, and closing capital employed here means net assets. Are you getting what I am saying? So FMP how much given? Average profit given 72,000. So NROR is 10. How much? 12%. Na? NROR is 12%, and closing capital employed is 4,80,000. This FMP means average profit, that is given. Check karo. Average profit is given how much? 72,000. Okay. Yes, sir. Now just apply. 72,000 divided by 12% is coming 6 lakh. Means 6 lakh is the value of business. And if the net asset is 4,80,000, what is the goodwill? So 1,20,000 is the goodwill. 1,20,000 is the goodwill. This is what? Capitalization of average profit. Right on. Point number 1, we are doing capitalization of average profit. Average profit means FMP. That I am saying bar. FMP. Now we'll do capitalization of super profit. Capitalization of super profit. So here goodwill is equal to, I have just given an expanded formula if you remember. So there are two formulas. Either you do super profit divided by NROR, or you do FMP divided by NROR minus what? Average capital employed. To that we'll use FMP divided by NROR minus average capital employed. Average capital employed. The FMP is what? 72,000 divided by 12%. Average capital employed is how much? That is 5 lakh. It is 6 lakh minus 5 lakh. So here goodwill is equal to 1 lakh. Here goodwill is equal to 1 lakh. Or you can do this formula also. Super profit divided by NROR. You can use this also. So super profit is what? You need to calculate super profit. The average profit minus normal profit. So here 5 lakh is the average capital employed. So 5 lakh into 12%, that is 60,000. You will do minus 60. So 72 minus 60 is 12,000. 12,000 divided by 12%. How much? You can see 12,000 divided by 12%. Same answer is coming or not. So you can use that formula also. Your choice. In both the answer will remain same. In both the answer will remain same. 5 also understood. Means right now what we have done? We have understood all formula by taking small questions. Okay, this much today. So I have taken 4 small questions to explain the only formula, how to use the formula. We have understood FMP, detailed discussion. Abhi, as per the question is concerned, we'll do some more question about FMP. Then next day, I will teach you average capital employed. Once you understood the average capital employed, you are ready to find out the valuation of goodwill. Okay, sir. So today this much only. Thank you very much. We'll meet again in the next day with new energy. Till then, bye bye. Take care. Enjoy your remaining day. Bye bye.